TikTok told you to file an LLC. YouTube told you to file an LLC. Every financial guru on your For You page swears it's how to protect your business and save on your taxes. Our guest has been doing taxes since 2007, and she says all of that is a lie. Look, Uncle Sam is playing with my emotions right now. I need my money during the year.
So people who have these nice sized yards are building ADUs, or they are turning their garages into ADU or in-law or whatever you want to call it, income producing property. So when I bought both my houses, I had a bankruptcy on my credit report. So I filed for bankruptcy after.
To disrupt and discuss, you guys got another interview for you today. We've got a real one on the show. Somebody I've known for over 2 decades. She's a Bay Area native, San Francisco, born and raised. And listen, this is what I like about her story. She didn't wait for permission. We'll get into that. She got into real estate back in 2004 because she wanted to buy her own home. Then turned around, started doing her own taxes, helped a few friends. And now she's been in the tax game since 2007. But what's interesting is she didn't stop there. She's now a contract analyst in construction. She's a notary, and she's even launched a photo booth business in 2024. So this is somebody who keeps adding layers, not staying in one lane. On top of that, she's a mother and one of those people who genuinely tries to help everybody she comes across. Welcome to Disrupt and Discuss, Karen Glover. Welcome, Karen.
Oh, thank you. That was awesome.
How are you? Thank you so much for accepting
I'm
the
good.
invitation. I've known Karen for 2 decades. Now, are we in our faces every day? No.
No.
But I do consider her a friend, and I do consider her family. She introduced me to my husband. So anybody who knows my babe knows this is the woman that introduced me to this man. So she's a matchmaker. She does our taxes. She helped us buy this house. That's all around renaissance for just me and my family.
I would say so. Yep.
Right?
I appreciate you. I appreciate you for trusting me in those things too.
Yes. If I called her and I needed her, or I needed some advice, whether it be finance or housing or taxes, she's never told me no. She's never told me I ain't got time. She was like, hey. She's always been there. I just want to say personally, I say thank you so much for I do consider you a true friend of mine.
I appreciate that.
Yes.
Thank you.
Yes.
You
Well,
support me too.
I try.
Yeah. We were talking about like our barbecue that we had. We said the one person that has been to all of them.
Yes.
We appreciate you.
Yes. The boogie downs. The boogie downs. And that's another thing you did too. We can talk about that a little bit, even though it's been passed on.
Mm-hmm.
But you are the founder, the originator of it.
Yes. Yeah.
I love that. Let's get into the real estate. Like we just spoke on, you started in real estate 2004, right? Mm-hmm. But you got into it. How? Tell your story. How did you get into real estate?
I started thinking about buying a house. And I want to say at the time I was with my ex now. We used to talk about it. And it was one of those where I'm just going to take some classes. I had took the classes before. So I had wanted to do it before. And I want to say my dad passed away.
Mm-hmm.
You remember my dad. So that was in like 99. So I had did it before. Then when I thought about it again was when I wanted to buy my own house. I was like, oh, let me go back to those classes. So I took the classes and I just took the test. And yeah, it was just really one of those things where I wanted to know more about it, like how to do it. And yeah.
Was there anybody in your family though that did real estate?
So my cousin did it. And so she was when I originally wanted to buy a house, I was going through her and I wind up going in the contract. And I was upset because she came back and said, oh, we need to get your score up. I said, wait a minute. I said, you didn't tell me that at first. She was like, oh, yes, I did. No, you didn't. Like I didn't put my money down.
Right.
I fell out of contract because she was like, oh, we just need a few points. And so whatever work that I had to do that, it didn't work. And like I said, we ended up falling out of contract. So at that point, when I was wanting to do it again, I was like, nah, I'm just going to do it myself.
Okay.
Yeah.
That's not an easy thing to get into though.
No, at the time too that I got into it, it was everybody was getting into it because it was the boom, right?
Yeah.
2004.
Right.
2005. So everybody was doing it. At that time, it was a lot going on.
Yeah.
It was a lot
Right.
going on. But I can say that I was a little nervous. I was a single mom
Mhm.
and people were really going for it. And I was one who did it part time because
Mhm.
I was just like, I got kids to take care of. I ain't know about quitting my job. So I actually was glad I did it at the time. There have been times when I wanted to go full time, but I just had too much going on. It's worked for me how it's worked. So yeah.
Right. That house, when you bought that house, that's also the house that you ended up, what was it? It went with the, what was it, 2008, right? The housing crisis of
Yeah. So
2008.
yeah, I wound up buying the house, a new build in 2005, and I had it for about 3 years because 2008, by that time, the market had dropped. I think when I first bought it, I refied once. Within that next year, I refied, but just to get a lower note, but that's how much, like, it had increased. Like, people were buying houses, and within 6 months, they was refining cash out refis because that's how much the value was increasing,
Right.
supposedly.
Right.
So, yeah, I had refied, and then by 2008, yeah, it was a wrap. It was a wrap. The prices were dropping, and so it was one of those things I could have stayed, yeah, but like I said, I had kids, and I had moved to Stockton, didn't like Stockton. I was working in Sacramento, and I was like, "I like Sacramento." So I was like, I'm just walking away." So I walked away, like most people did. Of course, some people stayed and were able to do the modifications, but I didn't know that at the time. I was just trying to I was like, it's 500,000 and it's worth 2. That house wound up selling for 240, something like that. Yeah.
Really? So it's
Wow.
upside down that much?
Oh, yeah, back
Wow.
then, yeah. Yeah, it was upside down. It went for I tried to short sell it first. And,
Remember that?
yeah, I tried to short sell it, and they said you had to miss these payments, you had to do all this. I think because I had kids, I was ready to just make sure they were in the school when I was moving. I was trying to get them stable. I didn't want to wait for a short sale, then have them move schools in the middle and do all that. So I was just like, I'm just gonna walk away. I walked
Wow.
away, and 3 years later, I bought another one.
Right.
So I
Okay. So explain, what does it mean to walk away? For those who don't understand, do you have to file bankruptcy? What happens when you walk away from it, from the
You
house?
just they foreclosed on it. They foreclosed on it and it resolved the debt that you had on your mortgage. I think things had to probably get put in place at that time because it was so many people. So I know,
Yeah,
like,
there's
when
a
I was
lot.
renting, yeah, they were looking for, like, when I had to fill out applications, they were like, if the mortgage was the only thing on your credit, they were okay with that, right? It was like, what, like, I ain't the only one. Like, everybody, right?
Wow.
Everybody had foreclosures on their report. So it was like, yeah, it got absorbed. I don't know. And then 3 years later, so after a foreclosure, you can purchase a home after 3
Okay.
years. So within 3 years, as soon as that 3 years was up, I bought another one.
Wow.
So,
I didn't know that. So after
Yeah,
3
me
years of
neither.
foreclosure, you can.
Interesting.
yeah, you can purchase another home. So it's funny because when that 3 years was coming up, I was too early. And so I got in the contract with this one house. And we were going through the contract. And so the lender came back and said, "Oh, it hasn't been 3 years. You got another, I think it was another month or two." And so I had to let that
Oh,
house go and wait
Oh,
until.
wow.
And so the day, I think on the 3-year mark, I was closing on that 3-year mark. Yeah. So for a lot
I
cheaper.
did, I did not know that.
no, neither did I. And it's
I didn't
Yeah.
know
interesting
that.
because when you do a bankruptcy, isn't it 10 years you gotta wait? I don't know about for a house, but you still can't do certain things for 10 years. Is that correct?
No, so you have to wait 10 years for it just to fall off. So when I
Oh,
bought both my houses, I had a bankruptcy on my credit report. So I
okay.
filed for
Okay.
bankruptcy after when I was divorced. So I want to say it was like 2000 and maybe one,
Okay.
something like that. I filed for bankruptcy. And so yeah, by 2005, I bought my house. So yeah,
So
and
it's
I
like,
did
what was
wait.
that, 4 years?
Yeah, you have to wait a certain amount of time and it might be 3 years after filing a bankruptcy. But yeah, both
And
my
that's a
houses.
chapter 7.
Yes, the one where you don't have to
Chapter
pay back.
7. Because chapter
Mhm,
13 is different. Chapter 13 bankruptcy, which is the one that you negotiate payments and you
mhm.
essentially you're paying back a lower debt. But after 1 year of being in the chapter 13, you can purchase a house. As long as you've paid for 12 months on time in that chapter 13 bankruptcy, you can buy a house within the bankruptcy.
Yeah, bankruptcy was one of those things growing up. It was like, what? Bankruptcy? But I'm glad somebody told me to file bankruptcy because I was
Yeah.
struggling. I had got a divorce and trying to pay the minimum payment with them bills. Somebody did me a favor. So like when people tell me, oh, bankruptcy, no, listen, you need a fresh start. Go
Well,
on.
it's a tool. It's a
It
It
tool to
is.
help you
yep.
get to the next level. And to your point, I remember going to church. Here we go. Church, and the pastor is making you feel bad because you're using chapter 11, 13, whatever the chapter it is. And it's like, basically, man up and pay your bills. And it's really,
Right. But people use it all the time. Rich people use it to get out of
Yeah.
debt. Companies use it, the Chapter 11, to get out of debt, to
it's a
resolve
tool.
their debt.
Tool.
It's a tool,
Yeah.
right?
It
But
is.
right, in certain communities, you
Mhm.
are frowned upon
Yes.
for
Yep.
getting
Yep.
a bankruptcy, but it
Yeah.
is actually a tool that
Mhm.
everybody
Mhm.
uses.
Everybody
Again, that
uses
makes
it.
me question the whole church thing, but I digress. Okay. All right.
So, doing real estate, but property wise, how many properties have you acquired and or bought and sold since you've had your license
For myself or other
for
people?
yourself? Now,
It's actually not a lot for other people because it's definitely a referral base, like friends and family. It's mostly my friends and family and whoever if I get a referral or something. But for myself, so yeah, my first one was in 2005 and then 2011 after that foreclosure. And then in about 2015, I bought a duplex. And then I bought another home that I moved into. Then after that, I bought two more properties. I
gotcha.
sold my last one and then bought two more. That's what happened.
Okay. I say
So,
that because KayCee and I have had a conversation on here where we were talking about ways to manage properties because KayCee also had properties prior to, but then you ended up letting them go, right? It was just,
Yeah.
yeah,
It was during that time period, and it was like we had tenants in there. When you're looking at, is it making money? No.
mhm.
If it's just hitting, if it's breaking even, it ain't making no money.
Yep.
Is that time period we had to make a financial decision, get rid of them.
Yeah. Yeah, I definitely get that because I have one that's not technically making money. It's breaking even. And that was actually the last house I bought. I thought I was gonna move in there. So it would have been better, but I decided not to move in there. I moved in there for a little while and then moved back to my other home because I had just renovated it. It was comfortable for me. It was a one story. I don't know about the two
Mm,
stories no more. So
yep.
right?
it's definitely sometimes you feel like, and when I bought the house, it was a good deal, right? It was a one that needed renovations, but it was definitely below the market. I thought I was gonna buy it and sell it. And then I was like, I'll move in. It had a pool. I was up and down. And that's really not the way I would recommend buying a house. I definitely made some mistakes. The house I bought before that, I had bought it. It was on the same street that I live on. So it was one of those kind of impulse purchases. I definitely wouldn't recommend it. I made some mistakes. I made some
Right.
mistakes.
We had a conversation before. I don't know if you remember. We were talking about the interest rates and how the interest rates are high. And you
Hmm.
said something to me that I didn't even consider. You said the markets are always up and down. And even though you may buy a house at a higher interest rate, you can still a month to 6 months if that interest rate drops, you can
Hmm.
refinance and get the
Hmm.
better rate. So you said you don't necessarily look at it like that because that can change.
I think it's better when you buy when the houses are cheaper, but that's typically when the interest rates are higher, like how it is now. Interest rates are, and they've come down a little bit. I think they're probably at a five now, but even when they were 6, 7%, which is when I think I purchased my last properties, but the houses were cheaper as opposed to 2001, right? 2020, when you were getting 3%, 2%, whatever it was, interest rates, but the housing market was inflated. You can pay less and have a higher interest rate. I like to do when the house is cheaper because you can always refi once the rates go down. And they
Right.
typically will go down.
A
People
month,
who
or do you
bought
have
for
to wait like 3 months?
700,000, them interest rates ain't going down less than that 3% that they bought it for. And people who bought it in 2021 and 2020, like when I sold my house, the interest rate's not going down. I sold my house in 2021, and back then they weren't even appraising the houses wasn't appraising for the contract price. So like the person who bought my house had to pay like I think it was like 10 or 20,000 over the appraisal price.
Oh,
What?
So
wow.
yeah, because they wanted that house. And that's what was happening. And it was definitely a seller's market. It was and a lot of buyers. So
Right. So we're talking about during the pandemic,
then
right?
during the pandemic, yeah.
Hmm.
Everybody could work remote. And a lot
Hmm.
of folks felt if we're never going back into the office,
Uh-uh.
I can move way out the sack, give me
Or
a
out
Yeah.
the
lot more
state.
bang for my buck, right?
Mhm. Mhm.
And I don't care the asking price because these are folks with long money
Yep.
that were willing
Yeah.
to pay for it. Doesn't that inflate the market as well? People who
It does.
don't, yeah,
Yeah, it inflates the market when you feel like you can get this amount for your house because people are paying those prices. So once somebody, and that's really honestly what happened to me. Somebody was the house down the street. Oh, is this what they going for? I was like, shoot, let me go ahead and sell this thing. The house that I had, the interest rate that I had, I bought it, and like within 3 years, it was probably 200,000 more than I bought it. And
Wow.
yeah, because
200,000
of,
more? Whew.
well, because of that time. It
Right.
typically doesn't do that, but because I bought it in 2018, so by 2020, 2021, you had the
Right.
influx of buyers, the interest rates went down, the prices went up. Now that hasn't happened since then, right? So they bought it at a certain price. It hasn't went up that much, and that was 5 years ago.
Quick question. So we're talking interest rates and everything. What if somebody is coming and they're paying cash full out? Does that also affect the market in some form or fashion?
If they're paying cash for the house,
Yeah.
no, not really. It doesn't. Sometimes sellers like cash offers. It's just an easier transaction. You might get a seller who's saying, I presented offers and they're like, oh, we want the cash offer. But some people are like, I'm gonna still get my money anyway. They'll go with the higher offer that's on a loan if the loan looks like it's going to close.
If someone is just coming flat out with cash, does that kind of mess up the market a little bit? Or because the seller gets the money regardless, but does it kind of unstable, if you will, the market, if that makes any sense?
In my opinion, it doesn't. When you sell a house, whether you sell it for cash or a loan, that's not gonna make the difference. I think it's you have investors. What happens is it makes it harder for new home first time home buyers.
Seen
When
that,
there's
yeah.
people, yeah, when there's people with cash offers or investors, it
Mhm.
definitely makes it harder for the new home purchase person who's purchased for the first time because they don't have that kind of money. They
Right.
can't negotiate those kind of deals. They're limited to what their financial institution is going to do. Where you got
Okay.
a cash
Okay.
buyer, they like, oh, we'll pay this and we'll pay that, or we don't need any contingencies, or we don't need no inspections, we don't need this and that. Where if you have a traditional loan, you got to go through all of that.
When you say that and you're talking about we don't want, what is it, contingencies, we don't want inspections, is that really sound advice? Not that you're giving advice, but is that really smart? Because there could be anything lurking in the walls, in the
Mhm.
foundation, and you might have cash to pay for the house, but you don't know what's lurking underneath. You're going to shoot yourself in the foot.
Depends on what kind of buyer you are. If you, like I said, if you are a first time home buyer and you have an FHA loan, you're
Mhm.
not going to be able to purchase that house under those conditions.
Okay.
My last purchase, I did have a loan. I had a conventional loan.
Okay.
I looked at the house, and because it's conventional, there were things that it didn't have to be in perfect condition, right? So
Hmm.
with an FHA, it does. You are not going to close
Mm.
on a loan. If you need some work done, the work has to be done before you close, whereas conventional, that doesn't happen. So
Okay.
I purchased that home knowing that there was a lot of things that needed to happen. It really depends on, I went in there knowing that this house needed to be renovated. I came with my contractor to say,
Okay.
so it depends on what kind of buyer you are. Like I said, it was lower than the houses in that area. I went with my contractor and I said, and we walked through and I said, this is what I want to do. Take a look. Because even when you buy a house, they advise you to get a home inspection. And so home inspections are good. But when you think about a home inspection, they really looking at the outside. They looking to see if it's any leaks. They're gonna get on the roof and see. They're not doing a deep dive in there. So they can tell you what they think. And when I bought my house, the one that I sold, that next year there was a leak. And I always tell my clients, things are gonna happen. That's why we got insurance and a home warranty. And so people are always like, oh, I'm scared, I'm gonna do this, that, and the other. We had a leak. I called the insurance. We got a whole new bathroom, remodeled bathroom.
Oh, shoot.
I,
Okay.
I'm not mad at it. Things happen. And like I said, I want to say that happened. We bought the house in 2018. Oh, that happened within a few months. And I had a home inspection.
Oh,
So
wow.
that happened within a few months. There was a leak. There was a leak in the bathroom, and we had a two-story.
Mhm.
It came down. The bathroom was over the pantry. It came down into the pantry. They had to redo the pantry, redo the bathroom, and yeah, we remodeled the bathroom with the insurance money. So it don't always have to be
Okay.
bad.
Right.
Right.
Okay.
It don't always have to be
What,
bad. You got to use. People get nervous about using their insurance, and I say that's what it's there for. So use it if you have to. It
what
worked out.
would you say new build versus pre-existing home? Do you recommend either, or is there a difference in the buyer? First time home buyer, should they buy something new build or should they get something pre-existing?
I don't think it matters. I think it matters what they want. Some people like new builds. Some people think that, oh, it's new, it's not going to have as many problems. So people tend to say that's one of the reasons you get some kind of warranty sometimes with a new build that you might not get with a pre-existing home. It really, I don't think, I think it's what you want. I know I had some people who wanted older homes just because of maybe the style, Now the new builds don't come with the backyards are not as big. It's
No.
certain things that you're giving up with new builds. Sometimes the rooms are smaller or whatever. I know when I was looking for my house, the last one I bought, I wanted a living room and family room, and now they have most of them are just the great room, right?
Correct.
Right.
They change the styles a lot over time. It really just depends. That was important to me, so that's what I wanted.
Right.
It just depends on what you want. It's a preference. Sometimes the new builds give you more incentives, right? They
Mm-hmm.
might say, use our lender and you're going to get $5,000 off. But you can
Mhm.
always negotiate that in your contract with the pre existing. You can negotiate different things with the seller if they're willing to do that. So they might give you a $5,000 credit or whatever it is.
That makes
Yeah, I
sense.
don't think
I
it's,
I think for me, what I looked at too, at first, new builds sounded more attractive because of what you
mhm.
said. Everything's
Mm.
nobody's lived here, blah blah blah. But when you deal with older homes, my aversion was, yeah, it might be in my price range, but it might have carpet, old carpet. Okay, do I have the money to uplift
Mhm.
all this carpet
Yeah.
and put in what we want? The bathroom
Yep.
may suck. It's a nice sized bathroom, but it's 1970s.
Right.
Do we have enough money to put in to redo all of this? Are
Mhm.
we doing it ourselves? More than likely not. We probably have to find someone, then that's extra money. For me, I thought a new build easier, you get somewhat of what you
Yeah, you can
want.
pick out all your stuff.
Right.
Yeah, yeah,
To a certain degree, but that also comes with a cost too.
yeah.
When
And
depending on the
sometimes that
materials.
they be more. You go to those design centers,
Oh,
Yes.
yes.
and
Yes, it's more.
yeah, I
And it's
think
certain things you don't know about it.
mhm,
And then you also look at too the builders. Would you say research the builders? Because I've seen this builder was cool, but I've heard horror stories about some builders that now they're putting
absolutely,
up homes that are just like not worth nothing. And these builders are just
absolutely.
throwing them up.
It's like with anything, you're only as good as the people who are working, who are doing it. So you can have this builder. It depends on what the workers is and what the inspector is saying. When I bought my new home, that first purchase, oh, we had problems. So that was our brand new home. They came in, we went through our inspection. They gave us the wrong color cabinets.
Oh,
And it took emailing the people. They gonna tell me. I said this was not in the what do you call it, the model. So I
Yep.
know which cabinets I picked out. They gave us the wrong color cabinets. The we had this. They had this opening like where the TV was, and they had a ledge, and it was not level.
Oh God.
So here's the thing. Luckily, my partner at the time, he saw all of that because
Right.
the regular eye, I couldn't see it. He was arguing with the guy. Had to get his leveler out and was like, "This not level." And I was like, "Oh, okay."
wow.
He saw something in the paint that I
Hmm.
would have never seen, to the point where they had to repaint our whole house.
Oh,
They had to
Wow.
put us in a hotel for a week so they
And
could
repaint
repaint
the
the whole
whole
house.
house. Oh God. I
Yes.
can relate though.
Yeah, and they
I
had
can
to
relate. You only have a certain amount of time to
yeah,
start going
yeah.
through because even though you do a walkthrough through a new build before you sign off, still they give you like I think it's I want to say 60 days or something like that or 90 days. But whatever you
Mhm.
find that time
Oh, yeah, you have
frame
a time frame to see what you yeah,
mhm.
and you
yeah.
see all kinds of stuff. So I can definitely relate.
Mhm.
And they don't want to fix it
Yeah,
or
we
they're like,
saw and
well,
this was
that's
before we moved in.
oh my gosh.
Yeah. So they gave us a credit for the cabinets, and with that credit, I think we changed out our kitchen and got, like, granite at the time was so,
That was the
yeah, they gave
thing,
us money.
right?
Yeah, yep.
So you got
So, yeah,
granite
we
to
had to
match the cabinet?
yeah, it was funny because the guy, when he came and looked at the cabinet when we were telling him the cabinets were wrong, and he was like, "Yeah, we can give you a credit," because we didn't wanna change out all the cabinets, like, it was a big kitchen. I was like, "Nah, that's gonna take too long," and we didn't wanna restain them. You gotta cover up everything, so it was like, "We'll take a credit." And so we were like, I don't know if he told him that we were gonna do granite, and he was like, "Oh, you can't put in granite for that amount based on the credit." And he did it. That's one thing I can say. The guy was
Right?
surprised. The guy was surprised that he found the people to redo the kitchen for that amount. So yeah, we had to hire somebody to do it, but yeah,
Wow.
we had to go in there and tell them everything that was wrong, and we had to fight for it. So I was emailing the corporate office. I was like, "Y'all got to fix this," because they don't try to tell you something. They was like, I had to
Right.
send pictures from when we went to the model home. I had to get all that information because they was
Oh
like, "Oh
wow.
no, this is it. This is the color. No, it's not.
Right?
No, that's not it."
Yeah.
So
No,
yeah,
that's not
you
it.
do have to advocate for yourself.
You really do. You really
They'll tell
do.
you anything. Mm.
What would you recommend for someone if they were considering going from renting to home ownership? What should they consider?
Consider in they definitely have to
What are some of the things?
consider depending on the housing prices where we're at.
Mhm.
if they can, the note. You might go from a 2 bedroom to, and especially if you've been living there for a long time, you're paying rent, it might increase, especially depending on what the interest rates are. There was a time like before when you were paying just as much to rent as you could with home ownership. That changes
Right.
when the interest rates go up.
Yeah.
And you just, if you can afford it, I think that home ownership in the long run, you're going to benefit more, but especially in California, the housing prices are going to increase. You're going to get equity. I think it, I know for me, when I bought a house, it improved my credit, right? Now
Mm-hmm.
you have a house on your credit. So my credit score went up.
Mm-hmm.
I was able, my second home, I was able to refi my first home to pull out money to buy my rental property. It did give me that. It just opens up financial situations, especially once you get equity.
Mm-hmm.
There was a time when I took a HELOC out to pay my bills, and all those things help. All those things come with owning a home. I
Yes.
think one of the reservations that people have are if something breaks. I hear that a lot. Like, but what if something breaks? What if there's a this or that? And I always, that's what insurance is for. And
Right.
sometimes it'll cover. It really depends. I remember when I bought my home, it's an older home, and the roof was leaking. And I called the insurance, and unfortunately at the time I think my deductible was higher than the roof leak. So there are times when it don't work out. My, what do you call it, heater went out one time. My warranty covered it. I paid $100. I got, so there are things, and I always tell people try both. Hopefully one will cover the other. So whether it's your insurance may cover it, if not, if you have a home warranty, it may cover it. It's just like a things gonna happen with a car too, and sometimes you gotta fix it.
Yeah.
So don't let that stop you. Is what I'm saying. Like
Right.
it, you gotta fix something sometimes.
I agree. I agree. Okay. I was hoping you would say that because a lot of people do say what you were just saying. No, a lot of people were saying they don't
Right.
want to have to repair it. When you're renting,
Yeah.
you got maintenance people. They come out and they
Exactly.
fix it,
Hmm.
right? When things go wrong. But you also, the long term, like you said, equity. Now, equity is not instant, especially we're not in the pandemic like some folks got to capitalize on
Right.
that. Sometimes it
Right.
takes what, like about 5 years, six
Yeah. It does take
years?
time. It does take time in a
Yeah.
more stable market, which is kind of what we're in now. It does take
Right,
time.
right. And that does, it plays a lot. I know for us as renting, when I look back at the amount of money that I spent renting for X amount of years, that
Mhm.
was a mortgage. I paid
Hmm.
a whole
Oh, it's
mortgage.
just expensive. Yeah.
Right. So that could have been towards my own home
Yeah.
ownership. But you don't think of it that way. When you're out there, you just, I'm renting, it's my place. But tax wise, it does help you as well. All those things play a pivotal part when you're financing a home, having a mortgage as opposed to just paying rent.
Yeah.
Depending on what time we're looking at, different times, that sometimes you can get a rental and it could be bigger than your home that you're going to buy. Sometimes you can rent a house and you might have a 5 bedroom for the same price that you might can only afford a 3 bedroom or a 4 bedroom. So sometimes you give up some stuff to transfer over
Right.
to home ownership. But I think the benefits in the long term are going to be worth it.
Yeah.
I agree. We are in
Absolutely.
April. April 15th, right? Is
Yeah,
due
April
due
15th.
day, right? Due
Yeah,
day.
it's busy right now. We got
I
what,
know. And I'm
days
so
left?
thankful that you gave us your time. Because I
Oh
know it's
yeah,
busy right now.
it's
How did
busy.
you get
It's
into
busy.
the tax? How did you get
So
into
taxes.
tax?
So it's funny. I was just thinking about like when I first learned about taxes. I remember working in high school, like summertime, and getting that paper. What I do with this, right? In high school,
Right.
whatever. And then I remember my cousin. She was like, "Oh, can I help you with that?" And back then, you have to get the books. They either mail you the books or you get it from the post office, and you fill it out. And
Yep.
I remember like getting my little $100 with what they took out.
Right?
My little, what? I get
Thought she
money? They
was
gonna do that?
rich.
Girl, in high school too? Yeah. Yeah, then as when I started working, I remember having one of my friends' mom do my taxes. And one day I was like, let me I would watch her do them. She get the little book and she reading all the stuff. I'm like, let me see. And so I did it back when probably when I was married, and I did it a couple times just reading the questions. And I remember me and my husband at the time going to like H&R Block.
Mhm.
It was hundreds of dollars. I'm like, dang, we don't got that, but that's what we want to do. So anyway, long story short, when we got divorced, I was doing it by myself.
Mhm.
Then they came out with like TurboTax and those
Mhm.
things. I remember doing it on there and just reading the questions. I remember what happened when one of my friends asked me to help her. And I was like, oh yeah, girl, I did mine. This all you got to look. I'm like, yeah, I did mine. I went through, I think it was Tax Act or whatever. And so she was like, can you help me? I'm like, yeah, we can do it. And did hers and somebody else's. And at that time, I was like, well, shoot, I can't keep like logging on. I can't figure it out. So I decided to find out how to do it, take a class. I took a class. And then I think and then my first year, I worked for Liberty Tax.
Mm-hmm.
Okay, I'm familiar with
And then so I worked there after finishing classes and getting my license and everything. And then I met this girl I used to work with when I worked at Kaiser, and she had her own tax business. And I never forget, I worked with her cousin, and he was like, "Oh, you need your taxes done because my cousin do taxes." And I was like, "Who is your cousin?" Right? Who is your cousin? Like, well, I don't know. And so I'm asking all the questions people ask me now. Is it
Right.
legit? Do she do this? I'm asking all the questions. And come to find out, she had a tax man. She might have had like 500 clients at the time. Like she had been doing
Ooh,
it.
Wow.
Yeah, she had been doing it for years. She had took over her aunt's business, which was his mom. So she had took over her business and she had been doing it. And so I remember going to her. I was like, "Oh, I took this class and I'm trying to do taxes." And she was like, I told her I was with Liberty Tax, and she was like, "That's perfect." She was like, "Stay with them because they're going to teach you all the different types of taxes." And she was like, "So maybe next season you can come with me." That was really good advice because going on your own, I didn't have a lot of clients.
Right.
The variety of taxes that I saw at Liberty Tax versus what I would have seen with her with my first year, it wasn't the same. So I started working with her. She like really took me under her wing and I would just help her. And then, yeah, that's how I started. So we still work
Oh my
together.
gosh. Okay,
And
so
that
you're
was like,
still okay. I think I went to her office. I went to her office to see you to drop off taxes before. Is that the same location?
yeah.
Okay.
We started at one office and then we had to move to a different office. So we're at a different office, but she actually moved to Georgia. So she's not even here anymore. I maintain the office that we have, but she does most of her clients or all of her clients now are virtual.
Okay.
So I'm trying to get to that point. I still got them ones that want an appointment though. Sheesh.
Oh, really?
Yes.
Oh,
Yeah, they
mm.
still want to.
but
I
it's
want to
hard.
drop off the paperwork.
Yeah, but it's hard to make that change. That my mother is older, and I had to
Hmm.
get in her mind. Just give me the tax information. I'm gonna email it to your guy. She's in Brentwood. He's in Oakland. If whatever else he needs, you just take a picture of it. We'll email it to
Hmm.
him. It's fine. So she's
Yeah.
somewhat of a believer. This is like the third year, but she's still on the fence.
Yeah,
I'm a believer.
they want to go into the office. They want to, and they. I know one person. Ah, this is my time to catch up. I don't got
Uh,
that kind
uh,
of
uh,
time. Look, I got 30 minutes with you.
No, this is not
Right?
one of
We can
those.
catch up. No, no,
No, we can't.
especially not in.
No, we
Don't
can't.
come in with that in March and April, in January, early February. It's not as busy. Okay, I got a little
Right.
time for you, but don't come in
Right.
March and April talking about, oh, how you been? What you been up?
oh
I'm here to do your
no.
taxes.
Right. Right.
Yeah.
So, what do you get a lot of people who own their own business or like entrepreneurs that you have to do their taxes?
Yeah, yeah. That's the LLCs. I tell you, everybody want an LLC. Ooh, child, y'all need
I
LLCs.
can use LLCs, huh?
I'm telling you, that's the one thing that I do see like younger people because they watching Instagram and TikTok and all the people telling them to start LLCs. And I have
Yes.
had to talk to my clients because they come in, some come in after March, right? And say, and I'm doing their taxes, and they say, "Oh yeah, and I started an LLC." Oh, you got to file LLC taxes, right? And the due date is March 15th. We in April. We at the end of March. So you late there when there's different things you have to do with LLCs, different reporting stuff that you have to do, especially that first year. Yeah, I do get people who are misinformed. So it's educating them. And first thing I ask them, why'd you start an LLC? Oh, and it's usually because I have a business. I started a business. Oh, okay. So then go through some questions. Did you make some money? Did you? No, I ain't really do nothing. Really?
Okay.
So, did they buy
So
anything or they just have a LLC? Do they
so what
have any
happens
like deductions?
so what happens is people think that when they have an LLC, it will help them with their taxes. And it can, because the thing with an LLC is it does flow through your personal taxes, right? So you
Mm-hmm.
do an LLC and whether you make money, you have a net loss, or you make income, that all is supposed to flow through your personal taxes. And sure, it helps you if you have a loss, right? Because it deducts from your income. And most people in the first years have a loss. But what they don't remember is you also have to file, you also have to pay the state $800 for having that LLC every year.
Yep.
So if you are not making money, in my opinion, it's not worth it to start it your first year of business. And it depends on what you have. So I'm starting a business. You got some assets you protecting. Some of them are very young, they in their 20s, and it's okay. You started that business. What's your reasoning for it? And some
Mm-hmm.
people, they may want an LLC to get business credit or have that paperwork for those reasons, and that's good.
Mm-hmm.
But the people who are not and just starting it because they decided to start a business, I tell them to think about, is that $800 worth it? Unless you're going to
Mhm.
do the things that you need to do with it, which is get business credit or your business bank account and really set up your business for that LLC. But if you're not doing nothing
Right.
with it, you're just paying $800, and
$800.
you have to file that tax return. So now you got to pay me some more money.
Ooh, dang.
Yeah,
Ooh,
usually
dang.
when we do our taxes, I just have the $800 come out of what we would normally get, and they
hmm
just file it that way. So
Yeah.
I think about it, but I don't think about it because it comes out in the wash with the taxes. So
Yeah. So and like I said, if you definitely have a business that you want to protect and separate it from your business, then yeah, you should have an LLC. You could have an
mhm.
LLC. What people really should do, though,
I
when
was
they
going to
have
ask that.
LLCs and businesses, is they really should take advantage of that and really get business credit. And if you're not doing that, you're definitely not taking advantage of it, because with business credit, it is separate from your personal credit. They do give you higher limits. Business credit is the advantage. And you don't even have to have an LLC to get business credit.
So when you say business credit, what specifically do you mean? You mean I can file for, say, SBA loan or something like that? Or I don't understand when you say credit.
You can, with if you have an LLC, but I'm just saying like business credit cards as opposed to
Oh,
your
okay.
personal
Okay.
credit cards. Yeah, I'm saying that. Yeah, that opens up a whole another door than your personal credit, because it's not on your personal credit. When I submit something for they don't know that over here, which y'all can't see when I'm buying a house. If I'm buying a house, y'all just see my
Hmm.
personal credit. All my stuff I owe is over here.
Right.
Yeah, on the business side, it helps with your debt to income ratio, because I might be in debt over here with my business that's not affecting my personal credit. So I do like that. And
Some
like I
people
said, they give you higher limits, way higher limits.
and some people may not understand how to utilize that business credit, right? They may get that business credit card, but then they're using it for a lot of personal things. So how should you
hmm
use your business credit?
Yeah, you definitely should use it for just the business, right? Things that you're doing for the business. But with any credit, you want to use it so that you can get more, right? If you're not using it, you're not gonna get it. Same with regular credit. You have to use it. So it's things that you might use it for gas, you might use it for purchases that you really have for your business. So everything that you do for your business, you should be using those business credit cards for everything. If I go to lunch with you and we talking some business, I'm gonna use my business credit card. I still have to pay that, but there again, it does separate it.
Mhm.
It's not commingling with your other personal credit. And when you go to get more credit, they can see that you've been using that. They're
Right.
willing and using it, paying it on time, and so you can
Correct.
get more. So you can get more. So
What's
I
the
remember
difference
having
between Oh, go ahead. I'm sorry.
no, I was saying I remember having them call me, and they were like, the one lady called me, she was like, "Oh, do you need some credit?" I was like, "What? What?" So yeah, she called me and she was like, yeah, this is from whatever division that it was." And I was like, no, I really don't need it." And she was like, "You should take it because they don't offer it," which is true, because I took it at the time, and
Mhm.
they offer it sometimes. But when I needed it, I called
Mhm.
and they were like, "Oh, we don't have it right now," but I need it.
Wow.
But now it is ongoing. Like now, if I need it, I can get it, which is good. And that's just because I established the credit with
Mhm.
them. Now I can go and get some business credit from them.
Gotcha. Because you've
And
already established yourself as
I've
a person
established,
who,
yeah.
yep,
So I have a credit
got it.
line with them now for business.
Okay. Now you said something about the LLC, filing taxes as an LLC. What is the difference in filing as a LLC as opposed to an S Corp?
But S Corp does not go to your personal credit. So whatever like I said, you make or loss, it flows to your personal credit. You have to claim that. Whereas an S Corp, it's separate. So you have to file those taxes. But with an S Corp, you might have employees. So with the LLC, the net losses or net gains acts like a W-2,
Hmm.
where it doesn't happen like that with an S Corp. It doesn't flow to your personal taxes. You don't have to file it with your personal taxes.
Okay. So would you recommend a person that was maybe a employee of one or two employee just one person filing an S Corp, or does it really matter? Does that benefit that person?
If it's just like a sole proprietor, like a one
Yeah.
person
Yeah.
company, having an
Yeah.
S Corp,
Having an S Corp.
probably if you're making a lot of money with that business, yeah, it might benefit you to have a different structure, to have that S Corp structure. Because again, like I said, you don't have to, I'm sure you have to claim it, but on
Hmm.
that business side. I think with the S Corp, there comes where you have to pay yourself or you have to have employees or whatever.
Right.
It's a little different than you having a percentage over here at the LLC. So on the LLC, if it's just you 100%, so whatever you make or don't make, you got to add that to your taxes.
So is the S corp the same as sole proprietor?
No, a sole proprietor is not it's not any of those. It's just it's your business. So you haven't established like that LLC, or that's what I was saying. Like people should do the sole proprietor first
Mm.
before they go to an LLC or S Corp or anything like that. When you're
I
first
see.
starting out, if you have a business, you're a sole proprietor. If it's just you, you have a
Hmm.
sole proprietor. So when you file your taxes, you're just doing a Schedule C as a sole proprietor.
Okay. And then
Gotcha.
could you still use the losses to go against your personal?
Absolutely.
Okay. So I have
Yeah.
LLCs. That's the only thing I knew. So that's
Yeah.
all I've had. So very interesting.
Yeah. So like with your LLC, you get that K. Well, do you it sounds like you file your LLC on your personal taxes with that Schedule C? You don't do a
Yeah.
partnership
Now
or
I have a CPA doing it now. So I don't know.
okay.
I haven't sent it all over to him to deal
Okay.
with. He
So,
and I'll talk about that a little later.
yeah, the sole proprietor is just anyone who like established a business.
Okay.
And so you fill out on your taxes what's the schedule. So it's called a Schedule C for any to report your business income or business loss.
Okay. Okay. Yeah. I'm also
Okay.
asking in the event that somebody out there is listening and they're like, what's the difference? What's this? What's that? Yeah.
Yeah. You're considered a sole proprietor when you start a business and you haven't
Mm,
established any of those other entities.
okay.
So sole proprietor,
Mhm.
LLC, S Corp, Corp,
C
I
Corp.
think. Those are
So
the
yeah,
4 different types
LLC,
of,
S
I
Corp,
think.
C Corp, yeah, and a sole proprietor. Yeah. So my businesses are sole proprietors.
Okay.
Yeah.
Okay. What's the one tax mistake people make every year, that every single year?
Every single year?
Yeah. Or what's one of the highest percentages of mistakes, that one mistake?
I can't call it a mistake. People just because they know what they do when they change them exemptions. The mistake is when they come and they know they ain't paid no taxes and are surprised when they owe.
When they
That's
owe.
their mistake is to think that you didn't pay no taxes throughout the year and that you're not gonna owe. That's a big mistake to think that. And they
Oh,
come in and I say, "Oh, you didn't pay no taxes. You got some kids? Like you got no, I needed the money." Okay, they gonna need their money.
you're right.
They gonna need their money.
I'm
So
laughing
yeah,
because I used to play that game.
they know exactly what they
Oh,
doing.
heck yeah. Because
I used
that's
to
what,
play that game.
yep.
I used to
Yeah.
play that game. I was
We
like,
did
look,
too.
Uncle Sam is playing with my emotions right now. I need my money during the year. We can settle the score during tax season,
That-
but I need my money now. Until tax season comes, I be like, dang, I owe how
Right.
much back?
Yeah.
Yep.
Yeah.
And they
You know,
come with
yeah, it's funny when we would get I used to work it as well. And so we would get those yearly bonuses. Everybody's like, all right, change your withholding, change it.
yes,
And then so you get
yes.
all that money and then it's like, all right, change it back, change it back.
One
Right.
of those people, I definitely changed it. Listen, I worked at. I'm like, oh, I think it was like March, April. Let me change my withholdings because,
I had
yeah,
morning dependence or something. I was like,
Right.
yeah. And back down to 2.
absolutely, yeah, yep.
If you was
I used
real
to change
bold,
my withholdings.
you put
Right,
exempt.
right.
Yeah.
Exempt. Don't take nothing.
Yeah, I had so many
Yeah.
of them. Yeah,
Don't follow. Okay. Disrupt and discuss family. We just talking. Don't do none of this.
Read the disclaimer. Read the disclaimer.
Yeah, read
don't
the
do it.
disclaimer. We
Right,
don't
and
do none of this.
if you don't, yeah, don't come talking about why I owe.
Why?
You know
Oh,
why you
right.
owe.
Wasn't it a
How
thing
much
that
do
you
you
So
used to be able to do claim 0 for 6 months and then claim 10 for 6 months and you would even it out? Is that a myth? Of a
that's what people
misnomer?
think.
Yeah,
That's a
that's
myth.
a
Okay, that's the thing. Okay, let me tell you. That's the common mistake that people make is thinking that they can do that because other people do it and not
mm-hmm.
knowing what other people putting on their taxes. So people will come to me and say, "Oh, we've got the same job. They got 10,000 back." And then later, I was like, later, do they got kids? Oh, I don't know. They got a house? I don't know. Did they you comparing your tax return to
Right.
somebody else because you think y'all make the same amount, y'all do the same. They got different circumstances than you. So that people do that and
Mhm.
it's go see what they did. I don't know. I
Right. To
can't tell
ask
you.
more questions.
Let me know. Because if that's what they I want to know. Because so yeah, people come with
Right.
with all those things. They think that and people think that they when it's a refund, and that's what I try to tell my clients, it's a refund. When you go to the
Mhm.
store and you buy something and you return it, you get a refund and
Right.
it's money back that you already spent. So when you say, "Am I getting a refund?" You didn't pay a lot of taxes. So a refund is just refunding the money because you paid too much. So
You
yeah, it's not.
overpaid.
And people think that a refund is just money they get. Now it can be if you have children.
Mm-hmm.
Some refunds come from credits, and that's another thing people make the mistake of. There's a difference between a credit, a refundable credit, and just lowering your taxable income. So I get a lot of that now with the tax changes that have been made. Like when all the seniors come in and say, "Oh, so we should get more money now." No, you get an extra deduction. That's not to say that you're gonna get more money. That's saying that they gave you more money to lower your taxable income. People do make that mistake. Credits, if it's a refundable credit, it really is kind of money back to you. Some of them will lower your taxable income. Some that are refundable is money to you. So, like the child tax credit, earned income credit. That's when
Mm-hmm.
people, when they say, yeah, you can get refunds without paying into it because your refund may be based on credits.
Got you.
So, when you have two kids, automatically that's $4,400 if your kids are under 17 because you get 2,200 per child. So that's automatically $4,400, right? So
Right.
if I was working and I made 30,000,
Mm-hmm.
right? And you get a standard deduction if you're head of household of about 25,000, right? Now my taxable income is $5,000.
Right.
Okay.
Let's just say you tax at 10%. The taxable income or the tax on $5,000, let's say it's $500. I got a $4,400 credit just for having kids. So that person don't have to pay taxes throughout the year,
True.
right? They don't
Right.
they might not have a tax liability, so they don't have to pay taxes because they have children that are going to give
And
them
they
the
only
credit.
make a certain amount of money.
And now you're going to get earned income credit.
Oh wow.
So you might get another $5,000 on top of that for earned income credit. Now you got an $8,000 refund or whatever it is.
Okay.
Yeah, that's how
But that's
people
only
get
for
those big
people who make
refunds.
a certain amount. So if you
Absolutely.
use that same analogy to a person that makes six figures or 100,000 a year, they're
Yeah, it's
not
not
going to
going to be the
receive the
same.
same.
Some of those credits phase out. If you
Right.
make 150,000, you're not even getting the child tax credit. So you phase
Like
out.
you can afford your kid.
That's basically what they saying. You don't need these credits.
You don't need these credits.
At a certain amount, you don't even get the credits. The credits that
Yeah.
you get under that income amount.
Right.
Yeah, people make
Right.
the mistake of thinking that they taxes is like everybody else. I had this one guy come in and he had an LLC and he was like, "Oh, I lost all this stuff. I lost all this money. I started this business." He gave me all I did is LLC. And I said, "Okay, you got $800 you got to pay to the state." So later, we were done with his taxes. So he called me a few weeks later and said, "I'm trying to figure out I ain't got my refund." "What refund?" He was he said, "Yeah, from my taxes." I said, "What are you talking about?" He said, "I've been hearing people say if you start an LLC, you get back all the money that you put into it." I said, just think about that. Don't you think everybody will open up an LLC? If all the money that we spent, we just get that back at the end of the year. I
Right.
would have a bunch of LLCs. I said, it don't work like that. And I was just like trying to educate him. And I was like, where'd you hear that? A
Wait,
lot
he
of people
thought
been
any
telling me
money
that.
that he spent after he got an LLC, whether it was on the business or not, he was going to get it back.
He felt like if he spent it on the business, if I
Hmm.
bought all this stuff for my business, for my LLC, that I was gonna get reimbursed. He was gonna get reimbursed, a refund. No. Who told you that?
Also, what was he buying?
Right.
I think he had
Boat.
he had I want to say it was he was doing breeding dogs. I think that's what it was.
Okay.
And
Okay.
so he spent a lot of money on the kennel, the food, all the stuff for opening this business. I think that's what he was doing, if I
Okay. Okay.
remember correctly. So he felt like he was gonna get that money back. And so that's it too. Just people just not knowing. They think that they're supposed to get this money back. Like I said, comparing themselves to other people who are getting
Hmm.
refunds and not really knowing what their refund is from.
Gotcha.
Yeah. And people think, oh, the other one is homeowners who think they gonna write off their renovations. That's one all the time with homeowners. I get that every year. Oh, we had to redo our kitchen. Okay. You live there?
That's your house.
Right. You live there? They like, yeah. No. And like, we had to put in, but they told us we had to. We had no, like, yeah. They think that if it's something they fix on their house, that they get to write it off, and it's like, no.
Well,
If it's a
Mhm.
rental, but
right. Get there you
not on
go.
your home.
Yeah, if it's a rental, if that's
Mhm.
a rental property, right?
You can write off. You can write off renovations. Yeah, that's where you can write off pretty much anything with a rental. Not anything, but
Right.
all your expenses you can
Right.
write off with a
Right.
rental.
But if you
So
do any
that helps.
upgrades to your home and it's not a rental, the best you could do is what? Refinance? Try to reappraise your house and refinance to get some money out of it?
Yeah, that's it. The only time you're gonna get something back is if it's like an energy efficient upgrade. So they do
Mhm.
give you some credits for things like that. But other than that, no. So that
And
is a
no,
misconception.
I was just thinking of another thing too, which is most people know this, but I don't know how many that one person that might not. When everybody's talking about, "I'll refi, pull money out, and do what I need to do," doesn't that start the clock over again? because you have a whole new loan.
Absolutely.
So yeah, a lot of people don't. Somebody had asked me about it. One of my kids had asked me about it, and they're like, "Hey, I need to do some upgrade to the house. What about refi?" I said, "Just know, it starts all over." She goes, "Ooh."
It starts all over, and with people too, refis are not they're not free either, right? So
No.
there's a couple things that happen when you refi that don't work in your favor. One is that it costs, right? So
Yeah.
you got to pay the lender, might charge you however much they charge you, then the taxes and all the stuff, like when you're buying a house, minus that down payment and some of those expenses. But you do have to pay a good amount to refi. It starts the clock ticking again. And then depending on what your interest rate is, you might have to get in a higher interest rate. Like I said, the
Right.
people who refied and bought back in 2020, they're not so anxious to refi unless they absolutely have to, because you're not getting those 3%, those 2%.
No.
So the best thing that those people can do is a HELOC, right? So if you need to tap into your equity, you have to do a HELOC to get some of that money out. That's sometimes a better thing to do as a refi.
Yeah. Well,
We
she's
talked
not going
about
to do
that.
it.
Explain that HELOC. What
Mhm.
does the HELOC mean? What is it? What does that acronym mean? I forgot what it's called.
Home equity line of
Equity
credit.
line of credit. There you go.
So you're taking out a loan on your equity. The good thing about a HELOC is that it lasts for a certain amount of time, right? So it's like a credit card, pretty much. They might give you a loan, and they might give you a $20,000 loan, and they might say that this HELOC is good for 5 years. So it's a revolving credit. So when you use it, you pay it back, that credit becomes available. And you can do that as many times as you want. And the only thing about the HELOC though is, like I have one. I think mine is for like 10, it was for 10 years at the time that I got it. And the interest rate back then was lower. So the one thing about a HELOC is the interest rates do change depending on the market, right? So when I first got it, that interest might have been 3%. Now, if I tap into it, it might be a little higher or whatever it is. And sometimes they'll send you stuff to say, oh, now's a good time to borrow against it because it's cheaper
Mm-hmm.
at this time. But yeah, HELOC is a line of credit. It's like a credit card. But they're higher amounts. So you can get them however much equity. And I want to say it might be 80/20. You might get 20% of your equity or something like that. I can't remember what it is, but it's as opposed to refining and starting that clock all over again, you can pull out that money. It's going to be a little higher because we all know if we refi and we pull out a certain amount, your mortgage might go up $100, $200, where this HELOC, it might be more every month. So depending on how much you take out when you refi, it might not affect
Huh.
your mortgage as much if you were to get the
Gotcha.
same interest rate. That's if we're talking the same interest rate. Back when I think I might have refied and pulled some money out, it might have went up a lot because the interest rates were pretty much the same. They were
Okay.
still low at the time. So those are all factors that you
Those
have to
all
think
make
about.
me nervous.
But for
Yeah.
people like you, it's definitely the HELOC. Don't go changing your 3% or
Yeah.
2%, whatever it is. You want to pull out it. You want to do a HELOC if you can.
Girl, that 3% be
And I could say too, when you think about refining, because I had someone say this too, right? They had a bunch of equity in their house. And I never forget that. I think that they said, ain't your home supposed to be your bank? Didn't people say your home could be your bank? And the problem was you didn't maintain and your credit dropped. So yes, your home can be your bank and you could use that like that and pull out equity, but you still got to qualify for it. You still got to prove to them that you could pay them this money if they give it to you. So
right.
that's the one thing people got to remember too. Just because you got a house, you still got to keep up your credit score and keep up your credit. Like I'll be like, I got it
Right.
yet.
I have a family member that says that, but he does keep up his credit score. So he does say, this house is my bank.
That's what people. Yeah, she
But
said
he
that.
makes sure
But
he
yeah,
pays all his bills. He has pristine credit score.
yeah. So it
So
could
yeah,
be.
there you
Yeah.
go. There you go. Okay. I wanted to jump into your photo booth business. Tell me a little bit about that.
So the photo booth was one of those businesses I decided to start out of a necessity. So it was my niece's 16th birthday, 2024, I want to say. Yeah, 'cause she's 17 now. Yeah, I was planning this 16th birthday party for her. And I was looking at photo booth companies, and I happened to call one of my friends who has a photo booth company in LA. I was like, oh, I'm asking him questions about it. He was like, "Yeah, this you could do it yourself." I'm like, "I can? Like, what I gotta do?" He basically told me what to do. I bought some stuff that I needed, and that was
Mm-hmm.
my first one. It was definitely a lot of trial and error because I had to make the overlay myself, and but we did it and we got through it. And then, so I was like, okay. He was like, yeah, so you got to keep doing it to cover the cost that it cost me. I had to buy all the stuff. I bought the lighting and
Okay.
he told me everything I needed to buy. I was like, yeah, I got to make this money back. So then I start doing it, and luckily my sister was opening she's an event planner. So that worked
Mm-hmm.
out for me too.
Ah,
I started doing her events. She started hiring me to do her events. She happened to open a bar in San Francisco. And so I did her events. And she has this group that she is with, organization,
Mm-hmm.
San Francisco Black Wall Street.
Okay.
They would do events, and I would go and do their events too.
Okay.
But it worked out too because she's a event planner. I
Right.
was lucky enough to have to do her events. So,
You would have to find that business.
right.
If you didn't know someone, you have to find
Yeah.
those businesses or those events
Mhm.
to, was it
Well, you
negotiate a
have to
contract?
advertise it. Yeah, you have to advertise, and people have to want to use you. That part was a little easier for me because she subbed me out on her events. So
So
that
how
helped
much
me a
did it
lot.
cost? You've been doing it for, or you haven't been doing it recently, right?
When I first started, I was doing it a
Yeah.
lot more. Yeah.
So what was the upfront cost, roughly?
Roughly, with all the equipment and everything, maybe $3,000, something like that.
Okay.
It wasn't horrible. It wasn't bad. There again, I used my resources. She had where we do our overlays, which is, I don't know if you know what the overlay is. It's
That's
the
the backdrops and stuff like that, right?
well, it's the design on the actual picture, right?
Yeah, yeah.
So yeah.
We have it
So
here.
okay.
So kind
So
of
I
like
was doing
this
the overlays. Yeah,
overlays.
when you take the
Yeah.
picture, it'll tell you whatever the event is. I had to learn how to use Canva, right, to
Mm-hmm.
do the overlays. That was something that was new to me. Yeah, it took some time, but there again, she already had it. I would use hers, and having the resource, having Marcel who does Glow House in
Shout
Los
out to Glow
Angeles.
House and Marcel.
Shout out. He's done our barbecues,
The Boogie Down
right? Yeah,
barbecue.
where
Yep.
he brought the 360 and the photo booth. So yeah, definitely shout out to him because I would not have done it had he not really shown me the ropes and told me everything that I needed to do. Yeah, definitely my resource.
Oh my gosh.
So I
So
happen
how
to
much can a
have
person make though? What did you say? You happen to
um
have what?
no, I was gonna say I happen to have those good people around me who
Right.
believed in
Network.
me, like my network. He showed me she was able to believe in me and let me do her events. I was lucky enough to have that.
How much can you
But
make or how do you price it? Your pricing.
for me, I'm usually lower than what you're gonna see everywhere else. Just same thing with taxes. Like my business partner said, we gonna undercut. We gonna undercut everybody. Yeah, that's what we do. Basically, I was just looking online, seeing what people were charging, and I was doing
Mhm.
a better price.
Mhm.
You figure typically, so my pricing is it typically is about $300 to $400 for 3 hours, a minimum of 3 hours. And that comes with
Okay.
the overlay, it comes with a
Mhm.
backdrop, and if you want, and you can do it where it's we can drop it off, or you can have an
Mhm.
attendant there. We always recommend somebody there to help in case anything happens. And so if you need an attendant, that's usually an upcharge, and depending on
Okay.
where it is. So
Okay.
if I've done a few in San Francisco, so we do have a travel fee for that too. But
That
if
makes
it's
sense.
local here in Sacramento, it's usually
Mhm.
about $300 for 3 hours.
Well, hey, girl.
Unlimited pictures. We'll have the props and yeah,
Yeah, I
yeah.
remember you did the last Boogie Down, right? That was yours.
So I brought mine,
Mhm.
and we were supposed to use it. We were supposed to have a few different ones, and I think
Okay.
we only used the one from Glow House at the time.
Okay.
Yeah.
Because that was
So
the cowgirl. Where them fans at? Was the
where the
thing.
fans at? Yeah, that was a
Yeah.
good one.
Yeah.
That was
It
a
was a
good
good
one.
one. It
Yeah.
was. Everybody got dressed up. It was a real nice one.
And
I
we was
liked it.
line dancing, everything. Yeah,
Yep.
that was a good one. We've had some good ones over the years. I could say that. Yeah, definitely
Absolutely.
had some good ones over the years.
That's actually something. If you're a person that wants to start a business, you like going out, maybe you don't go out that much anymore. That's a way for you to get out, network, meet new people, go to events. That's a good way of doing it.
Yeah. It's cool. Yeah, like I said, when I was doing Kenya's event, Prestigious Events,
Mhm.
her company too, Prestigious Events, I was definitely networking. And yeah, getting out, going to the parties. Cause like I said, they can push the buttons themselves.
Right.
I'm having a good time when I'm out at the
Right.
events. Definitely fun.
Exactly. That's something to think about. Something to think about, you
it
guys.
is.
Yeah.
You know?
And we do it for like whenever I have something, I always have the photo booth set up. When I have something at my house or the kid's birthday. So I've done it for a lot of family members.
Hmm.
Yeah, it's definitely nice to be able to do that for our family stuff.
And you're probably
So
saying,
like,
she always talking about her family and her friends. She a big family. She got a big
who said
family.
that? You
I
said
said, they
what?
probably like, dang, you only do it because you like, I only do the taxes for my family and my friends. Only do the real estate, family and friends.
Oh.
The booth, family and friends. She got a big family, y'all. She got a
And I don't
family.
feel like
And she
my
got a lot of
family is that
friends.
big. I don't feel like my family is that
Yeah,
big. I have 5 brothers.
it's a lot of
So I have
y'all.
an
That's big. That's big.
Oh, is it?
Yes, it's a lot of y'all.
I have
It's
an
a
extended
lot of y'all.
family too. Yeah, it is.
Ye-
Yeah, it is.
Yes.
I guess so. It do be a lot of us,
Yeah.
especially with our
And when you
kids.
started the Boogie Down Barbecue, the initial premise of that was what? To like bring family, friends, people from San Francisco together, right?
Yeah, we started that because we were just talking about it one day and talking about how growing up we had certain things that we did, like 4th of July. He was talking about his 4th of July, talking about we always go to Pleasanton, but that was our family tradition.
Yep.
And we
The
were saying
state,
how
stay
our
fair.
kids, yeah, our kids didn't have that, and our kids
Mhm.
didn't know. Growing up, we all lived in the city, so we got to get together with my aunts and uncles and my cousins all the time. But now, when my kids were growing up, we moved out to Pittsburgh. We Everybody was scattered, so we didn't have this
Mhm.
thing that where we could get to see our family, know our family, and our friends. Growing up, I knew my mama friends, and those was
Yeah.
like they kids was your cousins or all the stuff. So our
Right.
kids didn't have, and so we wanted to make sure that if my kids saw you on the street, they would know who you are, and you would know who they are. Our families and our friends, they would know each other. That's how it started. We
Yep.
wanted to have a time where if we didn't see y'all throughout the year, we was gonna see y'all at least this time out the year. That's how
That's
we
nice.
started it.
It's been
I
how
like
many
that.
years now? Yeah. How
So
many
20
years?
so remember we stopped right at 2020? Was that 2019 was our 10th year. And remember we weren't going to do it anymore. It was like,
Right.
oh, because that next year 2020, we was like, oh, good thing we
And then
stopped
the
at
pandemic.
2019 because we wouldn't have been able to do it
Right.
this year anyway. What happened was everybody was asking, is y'all having it this year? I was like, I told Terrence, I was like, didn't we have our finale in
Right.
2019? What they talking about? That was a finale. And he was just like, nope, people still want it. We our kids had was talking about, they were coming to us saying we'll do it, so they were invested in it, like wanting it
Right.
to do it, to the point where they were saying that how can we take it over, how can we help and
Oh,
do this.
good.
So
Yep.
then it was like, okay, I guess it's back.
It,
And
it
then
turned into like a legacy thing. Yeah.
yeah, it's back.
It's back.
I'm not as back as they are. Look, I help out, but I'm retired. I'm
Right.
retired. I help.
Yeah. It's
Yeah.
a big event.
Mhm.
They have, what is it, jet skis, barbecue, all you can eat pretty much, spades, domino, the bull ride. Then they have the stuff for
Yeah,
the kids. It's a whole event.
Yeah.
it's
See
a good time.
everybody
It's a good
from,
time.
yeah, it's a good time. See everybody. People come down from LA. People have come down from what, like the East Coast. The people have just
Yeah,
flown
we've
in to be
had
there.
yeah, it became, you remember when we started with just
Yep.
a little radio, right? We had our
Yep.
little radio in the grill, and then now we got a DJ.
Yep.
We
DJ.
have like I said, the domino contest, a dessert competition, we have the bull
Yep.
ride. We have just different things going on. We try to do something different every year. I remember one year we had like space painting for the kids. People usually will bring their jet skis. We don't have the jet skis anymore.
Mm-hmm.
Sometimes we do, but most people will bring their jet skis or their boat.
Where
And
is this located? Jet skis, boats, and yeah.
It's at, what
that
is it, Hogback?
Hogback Island, and
Yep.
it's always the second Saturday in July.
I never heard of that. Where is that?
I know,
It's
right? It
like
was
going, so
one of
you go over the bridge.
yeah,
It's just a fun time. It's fun to get
It
together with
sounds like
everybody and
it.
see everybody.
yeah.
Yeah.
The food is always good.
Yes.
Yeah,
Alcohol
it's
is
fun.
always good. We
Yeah,
just,
right.
it's good.
It's fun. There's, like I said, a DJ, and there's usually an area where we have the, what do you call those for the kids where they in the water? So there's like a little
Yeah.
entryway
It's a,
to
yep.
the like the lake or whatever for the kids, but then we have the pools, like the inflatable ones, like with the
Yeah.
slide and everything. They always
Okay.
over there having a good
Yep.
time. It's
They have
really a
like
good
their
time
own
to
little section. Yep.
yeah, and it's really, like I said, it really was a time where you just get to meet new people, see people that you haven't seen from the last time. It's time to catch up, talk,
Yep.
just in families to get to know each other. That's pretty much what it's been. We get new people like every year. I remember that the first couple
Yep.
years, people just happened to, but this one family who now they are involved. And what happened was they happened to be there when we were there. They just happened to be at the park with doing their own thing that day. I think they've been there like every year after that, every single year, and they brought their family, and so
Oh
just
my
really good
goodness.
time. Yeah.
Yep.
So they lucked up on it. They definitely lucked up on it. Yeah, they do everything. Yeah. So it's
Yeah.
a
It's
good
just a
time.
really good time. And it's no, it's just, you get to see people you haven't seen in a long time. And like she said, I've seen some people that I haven't seen in years, and then they'll pop up one year. I'm like, oh, I ain't seen you in years. And it's just
And then
good to see.
and
It's
you
good to see
see
folks.
people who you didn't know knew the people you know. So it's, oh,
Right.
who you know here, and so then when you
Right.
find out y'all know the same people, yeah. Because I know Tyrone
Absolutely.
come from the city. They like,
Yep.
yeah. I want to say Marcel.
Yeah.
But
His
yeah,
brother, Tyrone's brother, older brother, and Marcellus, they grew up together. Yep.
yeah. So
Yeah.
it's always that. It's always somebody like that. So yeah.
Always. Always. It
So
is a
you'll
good
have to.
time. Last thing I wanted to talk about before we let you go. I know you just started this and it's in the process. But for those folks who are out there that might not know about ADUs,
Mm.
what is an ADU? And explain what ADU is.
An ADU is, the term is, I want to say, accessory dwelling unit. And most people will refer to it like an in-law unit, right? Another
Yes.
building on your property. So people who have these nice sized yards are building ADUs, or they are turning their garages into ADU or in-law or whatever you want to call it. Income producing property.
Yeah.
Right.
Income producing units, right?
Yes.
Or space for, whether it's your children who are entering into adulthood or your parents who you might have to take care of. These are just units that are for those reasons, whether you rent it out to someone else or you have it for your family. But people are doing it. It's a lot, to the point where Sacramento is giving you plans for free if you use their plan.
What?
Oh, wow.
Yeah. So they have a program where if you use their plans, and they have a few different plans, a studio, one bedroom, two bedroom,
Mhm.
use their plans, you don't have to pay certain fees. So I think too, it's with the housing shortage problems that we're facing, that this is a way that we can build more housing, definitely in Sacramento. So yeah, so that's
Affordability, right?
affordability.
This
Yeah.
housing is so,
I know
like you
someone,
said,
or
you
I,
may have a child that can't afford to buy their own home, but they may be able
mhm,
to you.
yeah. And sometimes you have that space, like I said, whether it's on your property or I remember, who was that? Tara said this one family was renting a place and they said cars don't need a room.
Oh,
Basically,
oh, okay. Okay.
cars don't need
Better
a room.
turn their garage into an ADU, right?
Listen, cars don't need a room. So
Cars don't need a roof.
cars don't need a room.
Oh,
Yeah, you turn that garage into a one bedroom, whatever it is. If you got two car garage. I
mhm,
went to this one property. They bought a house here in Sacramento. It was a two bedroom house with a
mhm,
nice size yard. On that property, they turned the garage into it was a two bedroom, one bath, or three bedroom, one bath.
oh,
They turned
okay.
the garage, it was a one car garage. They turned that into a
Mhm,
studio. They added a bathroom out of a closet, turned like one of the closet into a bathroom, which made it like a three bedroom, two bath. And then in
mhm,
the backyard, they built a 2-unit duplex.
Dang.
So,
yep.
two one-bedroom units on one property, and they were renting it to traveling nurses. So,
That's
they
another
were
good thing
making
too.
a good amount of money. I think the studio was renting for, and mind you, this is less than 500 square feet. I think it was renting
Mhm,
for, I think she said 2,100, something like that, over
yeah.
$2,000. And they did a really good job turning this single family home into this multi-unit property. It was really nice. Had a backyard, little courtyard area. It was nice. They did a good job. Yeah.
Family member that did that. He turned the garage into a one bedroom
Mhm.
apartment or one bedroom dwelling, and then he built ADU, a two bedroom in the backyard because the older home had more space back there, so he turned it. So that's three bedroom, two baths addition
That's paying your
onto that
mortgage right
house.
there.
Yeah.
Pretty much.
Yeah.
Pretty
That's
much.
that's what people
His
are doing.
turnaround time was pretty quick, but I think he knew people because they say it takes a little bit to get certain things approved and they have to come and look at it and make sure everything is done to the county. I guess it is. But he knew someone, so it went a little bit quicker than what the average time frame is to get it done.
Yeah,
It was under a year.
become friends with the city inspectors and those people, because that you're if you don't, your project ain't going, you gonna have a problem, because they are the ones who are going to sign off on especially the inspectors. They have to come at certain times
Yep.
to make sure you're doing the right things. And if you got a problem with them, you got a problem with your property.
Oh,
Right.
Yeah, don't piss them off. It really depends on how fast your project moves. Depends on the city. Yeah, it depends on who's in the city. But yeah,
I would think
that's
if you get with Sacramento now, if they're willing to give you the plans, it'll run a little bit quicker, right? If
oh
they're
yeah,
willing
that's their
to,
whole, yeah. That's their whole premise,
Yeah.
is that if you use our plans, that's gonna make it that much easier. And like I said, they give them to you for free. So
Is that something that someone else in a different county, different jurisdiction altogether can even check into to see if that's even an option?
I don't know if it's like you might be able to get the plans. I don't know that if you take them to another
No,
city
not
or another.
necessarily Sacramento. Say if I go and try to get the plans for my area here, is that something that is just exclusive to what Sacramento is doing, or is that
Oh,
something that's
I don't
done?
know.
Oh, okay.
Yeah, I don't know. I've only seen it for Sacramento. I haven't
Oh,
looked into any place else. That's what it is. Yeah.
it's just
I didn't.
interesting to bring it up because that's something because now you're seeing all these different companies. You see it on IG and they just
Hmm.
plaster
Yep.
everything about these ADUs here and here. But again, to your point, if you can get something from the city that's already established, that's half the battle right there.
Yeah. Yeah. Yeah, because two, you have to get somebody to draw up these plans and then have them approved. So they're
Right.
saying, "Hey, we
Yep.
cut out that step for
Yeah.
you."
Yeah.
So that's a good one.
That
And
is
that
a
saves
good
you money.
one.
You gotta get an architect to draw up the plans and make sure they okay, submit them to the city, make sure they get
Yeah.
approved. So if you can cut out that step, that makes it easier.
That's, heck yeah.
And
Oh
they, like
my
I said, they have a
gosh.
few different ones. Yeah. Yeah.
Is that
80s.
something you plan on utilizing?
Yes. Yes, absolutely. I do want to put them on a couple of the properties that I have, but you gotta get the money. That little hurdle. So,
That little
yeah, that's one of
that
those things
little
where
hurdle.
your house has to become your bank, right? So you have to tap into that equity to get those things done. Yeah.
I would say that's smart. If you're going to take out equity to possibly bring money back into your household by building properties, that's instead of taking out equity and blowing it on something that you'll never see any profit back from.
Correct.
Right,
That makes more
absolutely.
sense.
Yeah, definitely take out equity for things like this when you're
Right.
increasing something. Yeah.
Not to go
So
on
those
vacation.
no, not to go on vacation, not to get a car. Equities should be
To get a
taken out
car, right?
because you could do that without it's not worth that bill. You probably can get a different one. Yeah. You can get a different loan, car loan. No. That's what I'm working on.
Ooh, that's
Uh,
Oh
enough.
my god.
Oof. Ooh, I'm tired and it
I
had nothing
told
to do
you.
with me.
She has a lot going on. A lot going
Wow.
on. We have a lot of Renaissance people on here, and you feel you want to interview little old me?
Yeah. Okay.
What?
I'm like, "What?"
Oh my God.
I
No,
appreciate it, though. Thank you for having me.
absolutely,
Oh, it was a
absolutely.
pleasure.
One final question we always like to ask people at the end of this because we're called Disrupt and Discuss. We have disruptive conversations. What makes you a disruptor?
A disruptor? What makes me that? I don't know if you mentioned it. I do have a 9 to 5, right? Times that's pretty much it. I think that finding opportunities where I can do some more stuff, like I
Mhm.
said, whether it's buying properties or just seeing something that I want to do and creating a
Mhm.
business with that. Just trying to figuring that out. Like not being just okay with the 9 to 5. Just
Absolutely.
trying to do more and trying to help as many people as I can along the way. I'm gonna try to
Right.
help you.
You're talking about how you like to help people. So my question to you is, what do you do for yourself?
Myself. No, I'm just kidding. I
Yes.
do like vacations. I like to go on vacations, and I've been doing that. One of the things I did realize when my kids were younger, my kids are now 31 and 33. It'll be 34
Okay,
this
that's
year.
around the age of my kids. Yeah.
Okay. Yeah,
Mhm.
so when they were younger, I would always try to do at least one trip every year, and we go somewhere, and I try
Mhm.
to take a trip for myself because I did feel like that if I'm gonna work, I needed to get something out of it for me other than paying bills.
Man, we were just
And
talking about that. Yep.
yeah,
Yep.
I always felt like I needed to see the fruits of my labor. Is that what they say?
Yeah.
Mhm.
I needed to feel that I needed to do something for me, and so that usually consisted of some type of vacation. I still do that. So I'm definitely going to go on a vacation every year, try to take my kids. I have new kids now, my nieces and my nephew that I am raising. So I have three nieces and a nephew that I'm raising now. We try
Yeah.
to go on vacation once a year. And of course, another pleasure that I have that it's one of those things that I love it. It's like a labor of love, right? Because it takes a lot, but the end result I love it is like getting together with my family. So I also plan a family trip with like my brothers and sisters, uncles, my extended family that I try to do every year. So that's a little more complicated, but it's worth it in the end. It's
Right.
definitely worth it
Right.
in the end. So those are things that I do for me.
Like I said, that's good because you got to keep yourself recharged because you're not going to be good to anybody else if your cup isn't full. Not trying to sound churchy, but it is so true. And again, I use the analogy that when you're on the airplane, as they always say, when that oxygen mask comes down, you got to put it on yourself first, then you put it on somebody else. So it all evens out.
Yeah, that's right. That's true. Very true. Yeah, I can't help you if I if I'm help anybody. I gotta help myself
Yeah.
first, right?
Right.
Yeah.
You're right.
We enjoyed you. We
I enjoyed
enjoyed
Yes.
y'all.
you.
Thank you.
Yes. Disrupt and discuss family D&D. Hopefully you enjoyed this conversation.
This is a good
Real estate,
conversation.
taxes, photo booths, ADUs, a lot of information that you can utilize. Again, hit that share, subscribe. Let us know in the comments what you thought of this conversation. We would love to hear from you on our Audible and on YouTube. We appreciate you all. Until the next one, you guys. What do we usually say? Bye.